The chief UK economist at Societe Generale, Brian Hilliard. He joins me now. Brian, it's been a really tough 24 hours for numbers. I mean, the deficit worsening, today officially back in double dip. How concerned should we be right now about the UK economy?
Well, we should be concerned, but I think that it's not got great implications for policy. I think that will stay on track. That's the key thing.
Political policy in terms of fiscal austerity and or the Bank of England?
They're both together. I think what we sometimes ignore is that although the fiscal policy contraction is very painful, it is actually delivering very low bond yields. We're within 50 basis points of bunds, and that's a monetary stimulus.
And would you agree, I mean, we have this quote from George Osborne today that the one thing that would make the situation even worse would be to abandon his plan. So you very much stick by that, no U-turn, that we must continue on this road that we're on.
I think that's right. Say we did relax materially to try to boost growth, we would then have an attack from the markets. We would then have to redouble our austerity efforts, just as we've seen in the Eurozone. So totally counterproductive.
When you look at the UK, and do you consider political risk? I mean, we look at what happened with the Dutch. The coalition has collapsed. There are many European scalps around. Does it feature on the radar in terms of political risk here for us?
Not really, and the reason for that is that as much as individual parties may huff and puff about the sort of subtleties of policy, there is really very broad agreement about what we need to do.
And let's just talk about the zigzag formation as well. Here's the data, Brian. A lot of people say this is backward-looking data. What for you is going to be the standout in the next quarter as we go to the next meeting in May for the Bank of England?
Well, I'd like to see the construction numbers revised, and I'd like to see them go up. And I believe they do actually underestimate.
Do they typically revise construction numbers?
They will, but only slowly. But the point is they're completely at odds with what the surveys tell us, which said there was a very buoyant first quarter. What I would hope to see is actually stronger services activity. And although we tend to focus on that big fall of 3% in construction, the real worry for me was that services overall only grew by 0.1%.
What do you think is behind that? Do you think it's the depletion of our income in our pocket, or is it a confidence aspect in regards to the services side of the equation?
It's a mixture of both, but what I would say is that even though we're having some concerns about how rapidly inflation is falling, it is coming down, and it's actually going to stabilise real disposable income this year. So I think the outlook for the consumer will actually improve compared to last year.
Let's just talk about the Bank of England and quantitative easing, because it's a great debate, isn't it? And I've read everything. Investec say it's a game changer. Schroders say it'd be remarkable if we don't get more quantitative easing. What's SocGen's view, and what size, if any, would you call for in terms of quantitative easing?
I think the chances of an expansion of the programme at the May meeting are minimal. And I think the reason for that is that in the April MPC minutes, we had a very detailed discussion of these GDP numbers. They were very much expecting exactly what has happened, indeed what I thought would happen, which is that we had this fall. Yet, they've then gone on to say that we could even see 3 successive quarters of falling output. But at that same meeting, the ultra-dove Posen switched his vote away from an expansion of QE towards the status quo. So I think it's very unlikely that they choose to expand it at the next meeting.
Some pretty dramatic moves, and just a very quick response on this, on the pound against the euro, the pound against the dollar. Surely a lower pound is a good thing for us here in the UK.
Well, you say it's a lower pound. If you look at the trade-weighted index, it's at the highest level up to yesterday in years. This is not an issue.
It's a blip, not a material change.
Absolutely.
Okay, Brian, thank you very much for your time. Chief UK economist at Societe Generale.